Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Tuesday, the 15th of March, 2022, about 6:25 p.m. Central Time. So we had a big stock market rally today, probably more short covering than anything else. There's really no other reason you can describe it. Nothing's improved in Ukraine, although it does sound as though Ukraine is going to give up on its bid to become a NATO member. Now, that's probably due in part so that they have something with Russia to talk about. Then the question is, what next? I haven't figured out and don't understand what Russia is expecting out of this. Are they going to cut the country in half? They can't manage the whole country. It's not going to happen. The country, every city is going to be what we talked about here a long time ago. Every city is a death trap for Russia. Every single one. They're going to lay siege if they can't work out a deal with them, if they get to that point, assuming Russia. Remember, Russia holds all the cards, not Ukraine. If Russia wants to get to that point, they can lay siege, they can level the cities. They'll never level these people. They've shown it. You're not going to break their spirit. So what's the point of putting in Russian overseers there? These people aren't going to pay attention to it. So is the better idea that these country parts that want to be Russian, Russia ends up with them, and maybe the rest of Ukraine is a non-NATO country that stays independent with the treaty with Russia? I don't know. It's a possibility, and this is evolving. I'm not smart enough to know. I'm not part of the meetings. And I don't know what Putin wants to be done. I know that Putin did a very serious event today, and I want you to listen. Listen carefully. He sanctioned President Biden and our Secretary of Defense, Blinken. I'm sure it carries a lot of weight, but they are sanctioned now. He also did it to the heads of the Departments of Defense, the CIA, and everybody else. So anything that they have in Russia, I don't know how bad these sanctions can get, but their yachts might be confiscated. President Biden, are you listening? Have you pulled your yacht out of the Moscow area? I hope you have. Otherwise, you're not going to see it again. So this is how ridiculous this junk becomes. I want to give you another ridiculous part. I read today that we're still talking with Iran and they're getting close to a deal. Are we out of our minds? This president, impeachment, yes, I'm for it. Why? They just bombed our embassy areas in Iraq, and we're going to try to have a nuclear treaty deal with them? I've seen craziness. I've never said that before on TV or anything. I think this is crazy. I don't get it. Okay, that's enough of my politics, and they have to end. More market. You know how much crude oil's dropped? 33%. It's hard to believe. Now, what's that going to do for inflation? It's going to get people talking that maybe we've seen the peak of the worst number, because if you take out the Iranian situation, not Iran, the Ukrainian situation, that's what I meant to say. Where was oil before all this began? In the 80s. 99 is not that far away. It's certainly not $130, $135 a barrel. That's going to be talked about. On the S&P, you're working your way down in stages. You get bounces. That's all that I could say. Let's look and see what this means on the chart action. First, we haven't been trading in terms of a trend in a while. It ended back right here. Up to this point, you had lower highs, lower lows, and then you stalled out right here with a higher low, basically. Then when you took out right here, now you got a whole different pattern. Admittedly, it was an outside day down. You went down, so now you got a higher high and a lower low. That is not a trend. And today you have another reversal day. So you got this big spike up, this one on the downside. You are not in a trend. You're in a whipsaw right now. But a whipsaw that's interesting because the market's rejecting taking out the big break low that we had. That does not mean this market has turned bullish as a chartist. It means we have found maybe a trading bottom for the moment. Where's the resistance? Well, that's what we're going to try to get up to. I think if the market rallies, the 18-day average at 42.73 becomes it. Let's assume it exceeds it, just for the sake of discussion. And you get through 43.26 and a quarter. You'd still have a lower low and a higher high. This chart pattern right now cannot set up anything to the upside. It can do things to the downside by rallying a little bit, failing, and then reversing down again. An outside day down would give me lower highs and lower lows. I can already see the pattern, but we're not there. That's the make-believe. So right now, nothing can be bullish. Things can get bearish. Where did the market stop the break? Tra-da-da-da-da-da-da. Did you take the enhanced Bollinger Band course? I'm going to repeat. It's on our website, www.iraepstein.com, under education. Go look at it. Exactly what I teach. This is where the market, if it's going to fall, this is where the legs of the market should come in against the lower band. Kaboom! And right on up. Where's the resistance? I'm going to repeat the 18-day average and your flattened momentum. Okay, what happened in the NASDAQ? I can't believe it. Here's the NASDAQ. This is yesterday. This is Monday. Today's Tuesday that I'm talking. If you drop, I'm going to look for the support at the Bollinger Band. That's all. Doesn't mean you've had a turn. I think the pros are out of the S&P, and I think they're out of the NASDAQ right now. Is their wait to see what's going to happen on the next whatever, be it Ukraine or the Fed announcement tomorrow. You didn't make it in the Dow to that number. That's pretty important. You had an outside day to the upside. You're over the 18-day average. You're not in a trend. You have a higher high and lower low, but the battleground's very clear. It's the 18-day average of closes. The Russell joined the crowd, went to what number again and held. Don't you like that I can cheer that on? Because I get it. I understand that game, and I teach you that game. It's so important. Then we get to the VIX, and I made a whole point for my subscribers, and I believe you, when I pointed out that this market is not running and doing crazy things. It's done all this before. I took my subscribers and I went back on the VIX and I showed them, folks, we'd been up to the 50 level on market crashes. On a war, we're not anywhere near that. So this is a contained break in the stock market. It's a bear market, don't get me wrong. We are not in a bull market. This isn't a correction. We are in a bear market by most standards when you look at stocks. But how far do we drop becomes the bigger question. And are we getting later into that move? You know, ask you a question. They reach a peace deal in a week or so in Ukraine. What do you think happens with the U.S. stock market? That's my point. Okay, so we go to the bond market. Well, this is different. You know, you got to fight inflation. So long-term interest rates higher. They'll get overdone. You're oversold. You didn't quite hit the Bollinger Band. You easily could, and I will again tomorrow say to you, that's where I think the pros came out if it gets down there. I'm repeating myself on the 10-year. It did it today, and that's where I think the pros are coming out. Dollar index. Okay. If you lose the embedded reading, and this is embedded, both numbers are over 80 and they've been that way enough. If you've taken my course and you understand slow stochastics, it's embedded. An embedded reading until the red line closes under 79 says that the markets keep going higher and the pros are buying on the breaks. That's what I think. There are some objectives. You have a window envelope, and I never show the window envelopes here. There'll be too many lines on the chart, and my paid subscribers see them because they've taken, in most cases, my courses. Now we're talking my language, and they're at home with it. That number and the upper Bollinger Band are still the targets in this. In the eurocurrency, an oversold market that had, and I just have to show you this, had an embedded reading, 1, 2, 3, you've got it, you lost it. Normally when you lose the embedded reading, unless you go back and take out this low, you're going to make a run for the 18-day average. So we'll see if that turns out to be the case or not. British pound is still very much in the bear camp. It's fully embedded. Thursday, you get the Bank of England announcement. It's widely expected, another interest rate hike coming from them. Bitcoin. We have lower highs, higher lows. The resistance should be the 18-day average of closes. In crude oil, can you believe this differential is down $3, almost, over $3 from its high? And what about crude? So the market spent some time over the upper Bollinger Band, did the Gorilla Glue trade, walked away from it here, and that was the game. And the game ended when you took out this low. I showed it yesterday. I'm not going to do it again today. And that's put it down. Now, if it wanted to go into a full-scale crash from this point, these are the numbers that I look for the major support, 84.96 to 84.77. I really don't think it's going to get down that far. It could if we had a peace deal between Ukraine and Russia. I mean, then there's no question oil's going to flow, blah, blah. If you notice OPEC today, they didn't even offer any idea on where we should be looking for oil prices. You know, they're useless. Lower highs, lower lows. The market at 105.75, a lot of resistance right there. Oversold in the WTI. It's similar to the Brent. Could get to the 82 to 81.40 area. I'm not counting on it. You still have the war going on. We still don't know what the wild cards are. Too difficult to make that call. Heating oil. Look at this break. I mean, this is not, my friends, normal. This is totally abnormal. First of all, the size of that one-day break. I've done this all my life, 53 years, and I don't care who you are. You don't see those type of things. That's once in a decade. You heard me. Very unusual. Look at nat gas, how it went from here, about in the 520s. It's all the way back here already, right at the zone that I've been telling you and my paid subscribers that this is the zone the pros are buying, 464.5. It's a difficult trade because where do you put a good stop? But I think that's where the market's trying to base out one more time here to see what's left and what they can do. As you keep hearing, I keep alluding to what I do in the morning for my subscribers. And let me explain what this is. People want to see somebody that they believe in charting or knows what they're doing. What do they think of all these charts? I make this super affordable. I throw everything I know at it. There's never rushing through the charts. I go on vacations. I'm still putting them out, as my subscribers will tell you, because I want you to be there. I take a day off every now and then, but it's mostly then, not now. And you get your money's worth. Because at the end of the day, who are you going to ask? You're going to go into some stupid forum, hey, what do you guys think of this? And blah, blah. Who do you even know is answering the question? Do you know that person? Have you seen their work? What do you believe? If you're watching me, you probably believe the work. That's why you're watching it. You want to see it. Otherwise, I'm a very entertaining fella, and I hope you like that. I'd like to have a regular TV show. But that comes too. In any case, go to our website. Under the word education, all of this is laid out. I'm Ira Epstein. Oh, by the way, that's research that this is laid out. Education's where you get the Bollinger Band. I'm Ira Epstein. You have a great evening. I'll see you all tomorrow.